What's up? I'm back with terrible video quality but beautiful audio quality. Lap it up, how good is it? Welcome back to Investing with Mark channel, and today I have an exciting thing to talk about. I've just gotten off the phone with some guy that I thought I'd never met, actually. It turns out we figured out that we had met each other. And we had a fantastic discussion about finance, investing, and really chasing after that feeling of investing in your future opposed to the expedience of wasting money on short-term pleasures. Right, quite a basic concept, but we covered a lot more. We covered some great topics, and I just wanted to document them here before they fizzle out into the universe with no recollection, or before I forget, basically. So the first thing we covered off on was talking about really the basic idea of what it means to be investing and what that means to me. I explained to him that, for those who know this already, I don't want to insult your intelligence, but some people don't realize that the only reason why you're rewarded with economic value is when you provide economic value into the marketplace. There is an equal and opposite reaction to every action that you make in the universe. It's Newton's third law, right? And so whenever we provide value or produce something valuable, then we are in turn always rewarded with the appropriate amount of financial compensation in a free market. And so we basically covered this idea and how it is one of the fundamental building blocks of a functional economy, right? And we talked about how that, disregarding that, just like the communists did and still do today, always ends in failure, in catastrophic failure, economically speaking, which obviously has catastrophic flow-on effects. So a freer market, which is what the West embraces and now looking like what China embraces, is the key to economic productivity. Okay, so now that we know, once we provide value, we are in turn always going to be rewarded. So what does that mean for us as investors? It means we can obviously spend our time and our efforts physically and produce value that way, and in turn receive it back in one form or another. However, when we purchase productive assets, we also are providing value or there is value being provided on our behalf. And so understanding that the reason why you're paid a dividend or an increase in value is assigned, at the end of the day, in the long term, it is always indicative of the value provided by the asset into the marketplace, which in turn creates the value that you receive, i.e., larger stock portfolio than you started out with, right? Or the money that you make when you sell those assets or receive dividends from. So that was one of the key things I wanted to just get down pat, because I'd never met this individual before. Like I said, we figured out we had, but in terms of an investing focused conversation, we'd never had one. And I sort of wanted to gauge his understanding of that, because that's how I think about when I invest, is I want to be investing in a productive asset. And that's an interesting one, because the topic of Bitcoin came up. And personally, I am bullish on Bitcoin. I don't own any, unfortunately, because I think my capital deployed elsewhere will be more productive. However, I could be wrong about that in the long term. But I fundamentally do like to invest in productive assets that provide value continuously and exponentially grow in terms of what they provide to the marketplace and society. And so that is kind of the crux of my counter argument to investing in Bitcoin. Not that I think it won't grow, and I think more and more companies will start to pile in and make that a section of their balance sheet. And we could see a massive rise in Bitcoin price over the next coming decades. However, that's just how I choose to invest in productivity producing assets, opposed to a store of wealth that relies on others purchasing it from me, and that being the basis of why they purchase it for me, for the sake of purchasing it, because others are purchasing it. Because obviously with the stock, you do rely on other people purchasing it from you, but you have that underlying intrinsic value, which is the cash flow, obviously, or future cash flows. So yeah, super interesting talking about that relationship with value production and receive value in turn, and that relationship with Bitcoin, and how you do have an intrinsic value of Bitcoin, because it means you can move hundreds of millions or billions of dollars on a USB stick. It does have intrinsic value, but is that enough to support such a large market cap? And I could probably make the case for a reason why, yes, it should. However, that's just not my style of investing. Like I said, I like to invest in things that produce cash flow. So what was the next thing we spoke about? We started to talk about the relationship between investing and having a masculine character, and how masculine energies tend to do better in the market. And we didn't really talk about feminine energy all too much. However, it's not a competition to say which one's better or worse. However, in the context of investing, how does a masculine energy, an embodiment of that masculine energy, how does that eventuate into returns? And that's the argument I was making, and that's what I'm going to explain. So I would say masculine energy is about breaking down barriers, going into the unknown, taking risks, believing in yourself opposed to believing in others, and having more of a leadership mentality opposed to a followership mentality. Now, what does it mean to lead? Ask yourself that. Pause this video, ask yourself, in one sentence, what does it mean to lead? My answer to that, and what I've gotten from Corey Wayne, is it means to go first. Simply, it just means to go first. And that is the embodiment of masculine energy, is to go first, is to not look around and see what other people are doing, look to the left and right. It is to stake your own pole in the unmarked territory where you go first, right? And how does that relate to investing? Well, an anecdotal experience I can share is that when Tesla stock is crashing, and pretty much all of my net worth is in it, and we're down roughly 50%, I'd say, give or take 10% at the time, I can't remember. We're down a lot of money in terms of what a lot of money is for me and my peer group. Excuse me. Down a lot of money. There's negative sentiment in the finance media. There's negative sentiment politically. There is fear, uncertainty, and doubt spread throughout. That rhymes. And everyone's telling me it's not the best investment. It's not, a good idea. And I turn around and say, well, and this is not an advice for anyone, but I turn around and I go to the bank and I take out a sizable amount of money to double down on my bet. And I doubled down, and in the end did really well. And now I've almost doubled that money and paid off the debt while the stock's been at much higher levels. So effectively, I've been purchasing at a rate much cheaper than it is today and when I was paying off debt. So does this mean taking risks always pay off? No, it doesn't. However, being willing to take risks and truly believe and take action on what you believe in and have conviction in can pay off rather handsomely. And I would argue that the more you do that, the more chance you do better in the long term. I'm not telling you to take any risks that you shouldn't. I'm saying to follow your own heart and make decisions on your own based on things you have learned and based on strong conviction, and to trust yourself and back yourself when you know it's right. That is the embodiment of the masculine energy that breaks down barriers and goes forth and leads, goes first. So we talked about that relationship of masculine energy and investing. And that flows on to broader conversations about relationships and things like that, and how, as a man, embodying these masculine traits is rather positive for relationships, particularly with if you have a partner that is more feminine, where you want to build that polarity, which, like a magnet, brings things together. And that might be controversial or I don't know, not spoken about in the general broader society. I don't mean to be controversial, and I don't think there is such a thing as toxic masculinity or toxic femininity. There is just males doing bad things, females doing good and bad things, males also doing good things, right? So I think a male doing a bad thing is not an embodiment of masculine energy by any stretch of the imagination. For example, people often think, and this is not a political discussion, however, this thought's come to my head now. People often think a man being violent is toxic masculinity, when in actual fact, being violent and losing your emotional stronghold is in fact the complete opposite of masculine energy. Going bananas over something that doesn't warrant that is not being a stoic masculine figure. It is in fact being on the more chaotic side, and being violent particularly is not a masculine trait. So there's a bit of a misconception, I would say, out there. And I'm not saying it's being a feminine trait either. It's just a bad thing. It's neither of the two. So anyway, there is a relationship between investing and masculine and feminine energies and those ideas, and they're worth exploring, I think. And I would say that whether you're a man or a woman, embodying the masculine energies when looking at your investing approach, when things are dropping and the herd is selling, do you have conviction in your shares that you own? Do you truly believe in what you have purchased? And if not, then I'm sorry, I can't help you. But if you have a stomach of steel and can trust yourself and back yourself, that is what makes long-term capital growth possible. So anyway, a couple of topics there worth exploring, thinking about, talking to your friends about. You can talk to me about it in the comments below. Thanks for watching, and let me know what you think, particularly about this conversation about masculinity, femininity, and how that relates to investing. Does it not? Am I crazy for thinking that? Yeah, like I said, thanks for watching.